All right, everybody. Well, hey, we are rock and rolling. Welcome to Note Night in America. Welcome back. Happy New Year to everybody. Good to see everybody join us on tonight. We are rock and rolling. Whoop, hang on here. I guess I got a little bit of an extra thing here. Rock and rolling. There we go. That's better. Let me get that fixed there. That's what happens when you live stream to YouTube. It pops up in the background there for it. But anyway, we're excited to have you guys here. Happy New Year to everybody. Hopefully you had a great holiday season. Great New Year's. It seems, I think I saw our good friend Cody Cox mention the other day, it feels like we've had a week worth of Mondays in the last 2 weeks with Christmas kind of hitting, the middle of the week. And then of course, New Year's in the middle of the week and everybody going back to work for a short week, and kind of hard to be motivated sometimes when you have the holidays off and things like that. But we've been here quite a bit. Didn't really do much the holiday season, kind of stayed here locally and just kind of hung out and worked on some stuff here, came up to the office, marketed, but excited to be here back. The first Monday of the year always brings with a lot of promise on what we want to accomplish over this new year. Is the first year in the new decade out there. So thank you again for being here on time. We've got some great stuff. I think you guys will really appreciate some of the research we've done on this here to help you identify some markets and areas that you can be making some money here in 2024, you guys. So let me pull up my PowerPoint presentation. We'll get rock and rolling on this thing again here. So why is it doing that? But anyway, all right. So tonight's Infinity and Beyond. For those who join us, actually, hang on here. There we go. It helps if I'm in the right. There we go, to Infinity and Beyond. Anyway, welcome to Note Night in America, everybody. We have these webinars just about every Monday night, provided vacation or other weird things are going on or travel. But we're going to be doing these on a regular basis, instead of once or twice a month, trying to give them at least 2-3 times a month going forward here in the new year. For those who join us with Note and real estate investors, people that are interested in the note business, people that are coming back, good to see some old names on the RSVP list here for you guys. We do have these recorded, so they are available for you guys to go back and watch. Obviously, we live stream it to YouTube if we can, which we're doing tonight. But we also take them and throw them up on our podcasts. And we have our Note Night in America podcast you can download. Should be all updated. All of 2019 episodes should be uploaded on there now. You can always go to WeCloseNotes.tv. It'll direct you over to our YouTube channel. That make it easier. But while you're there, whether you're on our podcast or on YouTube, make sure to go to hit the subscribe button. We're just south of 3,000 subscribers as of today. Would love to get you guys and hit that magical number the first week of the year. But most, if you can't, go on over to the podcast on iTunes, anywhere you listen to podcasts, and catch the Note Night in America. You're usually pretty up to date as far as being uploaded this weekend. Usually not usually more than a week or two behind. Just depends on our schedule with our production company. But anyway, some big numbers we've hit. Also with the Note Closer Show, our main mega torch, blowtorch of the podcast out there. We 550 plus episodes that we recorded before New Year's, over 500,000 downloads. We exceeded the 15 million radio listeners across the country in our channels. Would love for you guys to review and subscribe there. Lots of great stuff on tap there. We're going to be doing a lot of kind of nuts and bolts based training over the next few weeks, definitely the first 90 days of the year. But we've always got great content, great interviews, great guests and vendors, and we focus on different things there. So going into a lot of case studies and things like that for you guys to learn from as well. But like I said, one of the big things that we're going to be doing in 2020 is I'm going to get back on the road a little bit, coming on out to some of our different things. And these are the different markets that our AM/FM radio stations are in. And you've got Long Beach, Vegas, Colorado Springs, Boulder, Colorado, Milwaukee, Philadelphia, Lancaster, PA. You've got Macon, Georgia, just outside of Quantico is actually where the radio station is down there. And of course, Tampa, the Villages, and Newport Richey, Florida out there. So we're going to be traveling some throughout the country this year, kind of do some live remotes, some live events, get back on the road again, and get some stuff. So stay tuned for updates to some of the live recordings we'll be doing there with that we're looking really forward to. But anyway, let's dive into the content tonight, unless there's any questions about any of that stuff here. We'll make sure to let you guys know, give you notification well in advance if you want to come on out and join up with us, hook up with us live. All right. But tonight's conversation is all about to infinity and beyond. What I meant by this topic tonight is I think there's a lot of upheaval, little nervousness in the market. I've talked, honestly, I've talked in the last week to quite a few of my friends in the industry, people that I've traded with for years, people that I've known, golly, for a decade plus in the industry. And there's a little bit of an uneasiness in the market. Where's it going to go? What's going to happen? What's it going to do? You've got a friend in me to help you kind of identify those opportunities. So let's dive into those. We'll be out of here well before 8 o'clock tonight, but I think you guys will want to take some notes on exactly what I'm going to talk about tonight. So first and foremost, what does a crystal ball say? Well, I don't have a clue what the crystal ball says. All I know is what I see as far as trends and things like that to help me identify opportunities in markets that we all have to do. And honestly, guys and gals, this doesn't come overnight. This comes from feeling out, knowing what's going on in the market, seeing product coming and going, seeing what markets are doing as far as foreclosures and short sales and the news and all sorts of default rates. So it's a lot of just insight stuff, just not me sticking my thumb up in the air and letting the wind blow on it. It's literally, so we all know that there's been increased default rates on higher valued properties. And by higher valued properties, we're talking like $500,000 or greater in a lot of areas, especially here in Texas. $500,000 homes or greater. You can see those in Dallas. You can see those in Houston, Austin, definitely. Some parts of San Antonio. Those are the ones that have higher value, higher default rates because they're taking longer in the market to sell. We see that with a lot of fix and flippers. I've seen some of our buyers or some of our investor buddies in Houston who've done some higher end developments have really taken it in the pants the last quarter. Lose $100,000, $200,000 in some higher end builds because they just didn't sit there. So they end up having to turn them into short sales. And we all know banks still have defaults, even with default rates being down below 3% roughly. But what you have to realize is, yes, as an overall, default rates are down. But when you have a lot more lenders in the market, a lot more lenders, not just banks, but lenders in the market, 3%, 2.5%, 3.5% default rates, it still leaves a lot of product. It just means you have more sources. Now, you're going to have less larger pools and lists, which what does that equate to? Well, it equates to you to having to do more marketing and making more contacts out there. And that means going back and honestly having to shake the tree, dial for dollars again. I'm not talking about dropping postcards out in the mail. That doesn't work. We're trying to do, but you've got to go out and find those sources that are going to have that stuff for you. Now, there may not, like I say, may not have 1,000 assets. There may not be 1,000 short sales this month here in Travis County. If it does, that something bad happen. But what I'm trying to get at with you guys is I want you to think of that. Yes, there's a lot. You talk about 10% default rate across the country back a decade ago now. That number's come down as the market's recovered, but as the market's increased in size, you're seeing a very big disparity between the higher end and the lower end. The middle class is getting squeezed, and it's not always going to the high end side of things. It's going more to the lower end as people can't afford things. I would say you're going to see short sales across the country in your higher priced homes, not just $500,000, but I'm talking like $300,000 or higher. There's actually some stuff that are popping up in our neck of the woods here in the north side of Austin. We're seeing nice neighborhoods, which would be $1 million homes out to you guys and gals in California, but they're making a comeback. The short sale agents that we work with have said, hey, they're getting stuff all across the country. They're seeing it in the higher end pricing more so than the lower end. All right. Now flipping the script to the commercial side, you're seeing smaller balance commercial loans. And what do I mean by smaller balance commercial? I'm talking sub $1 million loans. All right. Banks love the big stuff. Okay. They love the bigger mortgages on their commercial stuff, $5 million or greater. Those things rarely default. It's the smaller balance commercial that you're already seeing a lot of stuff that's starting to default in other areas too, besides just your strip malls or your one-offs. Okay. And I'm not, and what I mean by this is I think there's a lot of opportunity in secondary markets. And I'm not talking the secondary marketing managers. I'm talking like secondary markets, like Austin would be a primary market. And we could say that maybe Waco would be a secondary market, or Fort Hood, Killeen is a secondary market north of us here. Let's see, like Oklahoma City would be a secondary market, or maybe Tulsa. You want to start looking at those secondary markets because I think you're going to see more success in those areas, especially on the smaller balance commercial stuff. You'll see some good stuff there. I mean, it doesn't mean there's not buyers for that. There's not opportunities there. I just think you're going to get a better price for your point because everybody's going to these primary markets first and foremost. We all know that's how it works, right? So looking at not your rural markets, but the markets outside of the major cities for the most part, okay? Now, the asset classes that I think are going to drive 2020, this is something you may make point of. Self-storage facilities. I think self-storage facilities, especially mom and pops, if you can pick some of these up. I had a really great interview with my friend Stacy Rossetti, who runs the South Atlanta Real Estate Club that I was out and spoke in November. And she has picked up 6 or 7 self-storage from smaller mom and pops things from, actually, it's kind of funny here, not postcards, not emails, but driving for dollars in outer area stuff, picking some stuff up on her finance, wholesaling some of that stuff to other people. And I think that's a smart play. I think you're going to see more of that. Now, here in Texas, we're one of the biggest states for self-storage. We see a lot of this, and I got to pay more attention to when I'm driving around. I actually get out and a little drive out for dollars in some of these areas. Here's one of the things I'm planning on doing a little bit more so. Now, when you're part of Note Camp Commercial, we had Scott Myers get on to talk about that. Carrie Garner from Note Camp Commercial talk about self-storage. I think there's some opportunities there. Just need to know where to look. And I think you're going to see that stuff in the smaller market stuff, driving it, stuff that needs some work. Maybe it's not occupied. You've got mom and pop turning into a business. It's turning into a job when they want to retire more so. I think there's a lot of opportunity there to be able to come in and put some good work to it and turning it into a note deal where you're picking it up at a substantial discount because you're taking over the note, or they're owner financing the property to you for what they owe, or as a master lease or a owner finance issue. I think affordable housing, I think we've all heard about this for years. The squeeze on affordable housing, the lack of affordable housing. We see that in Austin. We see that in so many of the bigger markets out there. That's why I think you're going to see a lot of opportunity in stuff that's outside of the town, maybe 30 minutes of your major areas, if it depends on traffic, that turn into smaller tiny house communities. I'm not talking apartment. I'm talking like a tiny house community, taking stuff that's maybe 5 acres, 10 acres, not like a mobile home park. I'm talking a little bit higher end on tiny house. I think you're going to see that. We're starting to see some of that here in Austin, actually. I got some friends here who actually have put together the storage container housing. Our friend John Keith at Direct Source is actually doing some of that in different parts of the country in Arizona. Okay. When you think about that, you can put a house together for $30,000, one of those or less, and be able to rent it out at $700-800 a month. You don't have to be smart to figure that out. That's a pretty good yield. It's just a matter of finding the right spots for that stuff. I've got some friends have been working on this the last couple of years, and I was talking to them over the holidays, and I believe what they say. When you look at all the news of all the retailer, the big box, by big box, the Walmarts, the large grocery stores, the big retail stores that are going out of business, taking those big empty buildings and converting them either to like a mixed use, an office park, like I kind of hear like a Regis or Executive Suites, turn into a storage facility. I've seen that happen in some of the different larger grocery stores or the Walmarts that have been kind of left behind, or even doing like they've done in Nashville or some of the other areas, taking some of those older storage buildings and turn them into actual apartment buildings. Okay. It's something that you're going to see a lot of, I think, in the next couple of years. Retail conversion, I talked about this, a lot of retail stores going out of business, such as a big box. Same thing, turn that into mixed use, office space, even some smaller apartments, because you can get a bigger bang for your buck on a square footage side versus another. Now, I think about, there's a place here, actually just down the road here, I looked at it for office space actually, a year ago. It's a big dentist office on a second floor. That whole building, second and first floor, is empty. And I'm like, why is not people moving into these things? Why are not offices? Well, a lot of offices, especially businesses, are having to constrict their expenses. Rent is one of the biggest overheads they have besides labor. And when you talk about increased costs, with them talking about increasing wages and things like that, minimum wage, that's going to put a squeeze on business, laying off. I mean, you look at especially what a lot of the fast food industry is doing, going to automated machines versus actually having a person doing it, because the businesses to survive, they've got to make ways to make things happen. Okay. I think mobile home parks can be very popular. I think that's a great, same thing with affordable housing. I think we're seeing more of that. Florida, Texas are two of the biggest states for that. Arizona is bumping up in that as well too. But I think you're seeing more of a conservative effort for those things to come back into, especially secondary communities, as it becomes a need for more affordable housing. All right. I think you're going to see master leases on commercial make a big comeback. Now, what's a master lease? It's a wraparound mortgage and owner finance it aspect of things, where you're paying a $4,000 a month or a flat fee each month to the landlord, and you're getting anything above and beyond that amount on a master lease aspect. I think we're going to see a increase of that, especially as the values suffer a little bit in commercial stuff. People come in and, hey, I want to operate something here. I'll run it, but they may not necessarily want to take over the debt. So it's basically an amount to cover the debt ratios and let somebody else deal with the operations. Okay. My good friend Jason Bible has been killing it with Airbnb rentals. I think you'll see that definitely if you're in a city that allows that. Here in Austin, that's not allowed. You'll be outside the actual Austin city limits to Airbnb. But I think that's going to be a big thing for people, especially in markets, if they can get that stuff up, if it's around touristy areas, if it's around traffic where tourism is a big part of that city, or the things are going on. I think Airbnb is a smart place, a smart play to make, even if you're doing it for your bedroom or an extra way to drive some income in. I think that's going to be a very valuable thing. That's what's made Uber and Lyft so, I think, valuable, is people using side gigs. I think you're going to see more of the side gig aspect, especially when it comes to housing. It's already happening. I think you're going to see a lot more of it throughout this year and the next. Okay. Affordable. I just think affordable housing is going to rule. You're going to look at, even though right now that's a lower default rate a lot of times as far as affordable housing, because you have people that are staying in their house, they're bringing two households in. You're going to see a higher default rate. Well, we always do first-time home buyers. They get in, they don't understand what they're getting into. The tax values change. They lose their job. They're in a budget mindset. They can no longer fit their budgeting because they've lost their job. They've lost hours. You're going to want to look at the wage gaps versus lower priced homes. What's going on in a city as far as the average wage versus the lower home prices, and take notice of that. So one of the things that I did, I actually put a couple, I dove into and pulled up some lists of markets that I think are going to be valuable that you're going to want to take a look at, and then markets you're going to want to downright avoid as well. So let me bring up the spreadsheets here. I put two together in the same thing. Hopefully it's not. Here we go. Excel was giving me issues earlier. Okay, so here are the cities. Let me go and increase this some. That have the largest inequality gap. Okay. 1 through 75, 1 through 50, actually. Top 50 markets. And what they did is the inequality growth, how much has grown over the last couple of years from 2008 to 2018. I don't have the 19 and 20 numbers yet. This came out last year, actually, okay? Last year being 7 days ago, or 2019 just being a week ago. But kind of surprised me in some cases. Philadelphia was kind of surprised me. New York has inequality growth at 12%. New Orleans, Boston doesn't surprise me. San Francisco doesn't surprise me. Miami doesn't. San Francisco, LA. Memphis was a number that kind of surprised me, along with Detroit. Those two cities with inequality at 13.4% most recently. Okay. That's a scary thing. And the growth of that 17% almost in Memphis. That's why Memphis is a higher rental market. It's a rougher market. You see a lot of that growth. People can't afford their rents. Okay. Detroit, Providence, Rhode Island, Chicago, Illinois, Houston, Texas, kind of surprised me on that one. Birmingham, a much smaller geographic area, but still 12.6%. And then a 12% inequality growth. Cleveland, Ohio doesn't surprise me. Pittsburgh, PA, Baltimore, Maryland, Milwaukee, Wisconsin. Cincinnati, Ohio was picked as, number 20 in inequality growth. We got a question here from somebody. Definition of inequality growth means basically housing costs are increasing faster than the wage gaps, or the wage gap is growing more. They can't afford as much as they used to. Okay. So there's been a bigger growth between the lower class and the upper class. Okay. Does that make sense as far as, hey, they're not making as much money in the lower class, but the cost of is growth. The cost of living in the city has grown. Okay. It's been a decade for the most part since they've done a big, in most states where they've done a pay increase. All right. Hartford, Tampa, Orlando. Orlando didn't surprise me at all. I mean, the average wage there in Orlando is like $19 an hour. But it costs a lot more there because to live, there's really no affordable apartments inside the Orlando area. Tampa doesn't surprise me, kind of a big rebound as well. Buffalo, New York, you can see it was at only 6.5% inequality growth. It's been a slower growth. Louisville, Kentucky as well. San Diego, this was what surprised me. They haven't had much change. They've just been completely unaffordable for the last year. Oklahoma City stayed pretty there. Riverside, California, St. Louis, Missouri, Atlanta, Georgia, Columbus, Ohio, which we think it's a great market, has stayed basically the same last 10 years as far as inequality growth. Okay. Only 0.5%, but still 11%. Rochester, New York, Phoenix, Arizona, Seattle, Washington was a surprise one on there. That's kind of crazy the things they're doing, especially Portland, Oregon, as well as expensive as that's getting there. Indianapolis, Washington, D.C., Richmond, Virginia, Dallas, Texas, Vegas, Nashville, Denver, Colorado, Austin, Texas. That one was kind of surprising. A negative in inequality growth. Kansas City, Missouri, Raleigh, North. So what do you say? Does that mean you want to be buying in those areas? Not all of them. No. I mean, I would be buying in Austin, Texas. I live here. I love this area. That's actually the wrong. Well, that's actually just Austin itself, not the whole area. But most of these areas are the growth, the gap is too high. I mean, we live here and live nice and live comfortably. But Steph and I have talked about how it's just getting kind of out of hand here locally. So we're looking for other areas. I know other people like people in San Diego or LA, San Francisco feel the same thing. Looking for places that are much more affordable. So these are the top 50 cities. We're the biggest inequality growth based on some numbers by the census bureaus and the labor statistics boards. There's another one we did here. I pulled up. Let me make this a little bit bigger. This is the top 15 most unlivable cities, where the average cost of living and what you would take, how many hours a week you would have to work to live in an area. Okay. So, and they ran some numbers, and we all know these average numbers these are skewed a little bit. Okay. But they ran these numbers, and San Francisco did not surprise me. New York City does not surprise me. We all know how expensive it is to live there. Jersey, San Jose right there. Austin, Texas doesn't surprise me. Oakland, Honolulu, Virginia Beach, Atlanta, Anaheim, Arlington, Texas, Newark. You see some of the same names on here of why they say it would take a while for you to work. And you're starting to see that you're going to put 56, 40 hours just to break even. And then you start rolling down here to the bottom 50 becomes more of the more affordable cities, as they say. So like Bakersfield, California was the most affordable out of the top 75 markets. Fresno, Toledo, Lincoln, Tucson, Cincinnati, Phoenix, Detroit, Mesa, Arizona, Cleveland, Ohio, Colorado Springs, and Stockton, California. Now, what have I done by sharing this stuff with you? Probably confused the hell out of you a little bit. The thing you have to look at is you have to take a kind of look at these numbers with rose-colored glasses as best you can, or filter glasses, to understand that these are skewed because they're taking average numbers and average things. You're going to have peaks and valleys in every market. You're going to have high overpriced stuff and underpriced markets. The thing I think you need to look at more so than anything else is look at the median wage of what your the area around where you're buying at. What's the median income level in those zip codes? And understanding that if it's a $60,000 house, okay, that you expect to sell, then taking that number, that $60,000 number, and taking a third of that comes to 20 grand, right? Well, as a mortgage banker, mortgage broker, the most that we would probably approve somebody at for a loan would roughly be around 40% of their debt, of their ratios, so their housing ratios, 40% for their housing. All right, and that means HOAs, housing costs. So if you take 40% of 60 grand, that means they'd be making at least 24 grand a year is what they would be paying towards housing. Sorry, 24 grand a year. Okay, 40%. Yeah. So for a $60,000 house, that's what they paid. They'd be making at least 40 grand a year. Okay, and bumping those numbers up depending on where you're living. So start looking at where you're buying assets and looking at those areas or the zip codes as far as earnings. And one thing I'm always a big fan of is not buying anything below $500 a month in rent. It's too low. It's too very low, and it's going to be rougher for you. So you've got to take the step up in there, but you don't want to be going too far up the rent ladder where it's the too high an end that you becomes unaffordable at some point. Now, in other areas, we talk about home affordability. Rent rates are higher than ever, and vacancies are all-time lows. We're at like less than 1% here in Austin, Texas. It's not what I'm buying here. They charge you more for rent. It's great if I own stuff here, great, but it's also bad because stuff's more pricier here if I do find anything. So that's why you've got to start looking, I think, in some of these other areas. We're seeing contract for deeds getting recycled at this point for the most part. We're seeing not as many non-performing portfolios, but we are finding some good deals on an individual basis. So you've really got to double down on your marketing, double down on your asset manager list. I would say, especially here in the first quarter, to find stuff that didn't get moved off their books in the last year. Okay. Questions, comments from anybody? Like I said before, and we'll go back here, I think the note business is still going to be around forever. That's the biggest thing. It's going to be around forever. You need to know your markets that you're buying in. You need to know your markets better than ever than you used to. I've seen so many fix and flippers that made their money in fix and flippers, and they're like, the days of the $40,000 checks and fix and flipping are gone. All right. You've got to understand the cash flow game. You got to understand your longer term expenses. Are you going to be able to increase your market rents by $1,000 in an apartment complex overnight when you take it down? No. Yeah, for those that are live on here tonight who are RSVP'd, I'll send an email out with the 2 charts for you to take a look at. I mean, it's pretty easy for you, but yeah, we'll get those out. No problem. Thanks, Vance. Get it out first thing in the morning with a link to the replay. But that's what I'm saying, guys. Look at your stuff. You've got to make sure more so than ever that, hey, it's going to make sense if you get it reperforming. You make it sense if you got to take it back as a rental. All right. Makes sense if you've got to put some work into it. Cash flows, a game you got to look at. I've not enjoyed rentals. I've avoided rentals for the most part if I can. But the thing I think is important, if you are going to buy stuff, make sure you know your market. Make sure that if you do have to take it back as a rental, you're okay with the neighborhood. Because there's areas that we've bought in the past, like, oh no, we'll just sell it as an REO, let somebody else come in. Well, no, these days, since the market pricing is going up a little bit, you got to make sure it's going to make sense. If you do have to take it back, it's going to make sense for you. Okay. You're welcome, Vance. Questions, comments, concerns for anybody? Our WC and crew members expect we're going to get a nice swag bag out here first of the first month of 2020. We're getting a nice swag bag coming out to quite a few of you guys out there. We're excited at what's included. So that's why I said, guys, know your markets. Look at some things here. Get out, drive for dollars. I hate to say that because it's been a long time to do it, but I'm doing that in some of the small commercial stuff. And see if I can't take some of that stuff over or look for operators or even stuff that I don't mind taking down. Like I don't mind. Heck, there's enough people out there that I can come in. There's a self-storage facility that I can come in, or even a piece of land where I can throw some mobile homes on that we can take down, or even put some tiny homes. There's enough people out there locally and vendors wise that I don't have to do all the heavy lifting. I can just be a deal maker and put some things in place and turn that into paper with owner financing, or offering up financing to buyers to come in and do those things and turn them into a paper game. All right. Because basically you're not going to get a traditional bank to finance you at 50 grand, even in a nice small house, but that's where you'd be in the bank if you can take some of this stuff down and really make some things happen. So, all right. That's all I've got for you tonight, guys. I don't have that much. Like I said, I just want to go through a little bit of this. What you need to be doing is thinking what's going on, what's markets around you, whatever areas around you that maybe within an hour drive of where you're at, 30-minute drive of where you're at. Take it, pull out a map, circle on it, or circle on where you're looking at, or pick just 2 or 3 cities and really focus on those cities to get to know it. Okay. That's one of the things that we're looking at doing and join us as we hit the road a little bit more this year, heading down some of the markets and doing some one-day buying tours or one-day market previews as we looked at 2020 to see what's going on. I know so many people are like, oh, we're going to war with Iran, or what's the election going to do? Is Trump going to get impeached? Look, you can't sit around and wait for those things. Those things don't affect us on a daily basis. What you do and what the offers you're making and the marketing you're doing for deals. I mean, so you're joining the self-storage facility, membership of Texas or Florida or mobile home associations and marketing that way. That might be something to think and look at doing as a way to help you leverage your time and money. And that way, as you get lists in, you can do some due diligence on the financing and banking side of things and take up your game to a whole nother level. Okay. All right, guys. That's be it for this night, this Note Night in America kickoff one, kind of short and sweet. So you guys can go out and do some things and get rocking and rolling here in 2020. As always, we do have our, just so you guys know, we'll probably have 4 workshops this year. We may even we're doing a smaller one in person here in Austin, Texas. Been a while since we've done that, but do some stuff with it. We tweak some things up in our education classes. As always, a couple of things that we've tweaked up this year too. Also, we have our 2-day one-on-one. If you want to come and spend 2 days with me here in Austin, you can pick a day, Monday through Saturday. We're no longer doing Sundays, but Monday, Tuesdays, or Friday, Saturdays. Pick 2 days yourself plus your partner. Come on in, spend 2 days with us. It's a 10 grand. Trust me, you'll walk out and get rock and rolling. Our last couple guys have walked out with at least 4 to 6 deals, either under contract or bids made it in, and getting ready to rock and roll. I know one of them was getting ready to close on 3 deals right now, so pretty stoked for him. So love to see you. Give me a phone call. Scott@weclosenotes.com is our email address, and we'll see you guys all at the top. Bye.